Think your bank is your financial buddy? Think again. With inflation rising, your cash is losing value fast. But fear not, there's a whole world of assets out there waiting to be explored, offering the growth potential that a traditional savings account just can't compete with. Today, we will talk about 7 assets that are better and safer than cash. Number 1. God's money. Remember that feeling of holding a gleaming gold coin? There's a reason why precious metals like gold, silver, and platinum have been valued for centuries. Unlike paper money, they're a tangible store of value. Governments can print more and more cash, but there's only a limited supply of these precious metals on Earth. That scarcity makes them a hedge against inflation. You see, the money in your wallet loses buying power over time. Precious metals tend to go up in value to keep you afloat. Imagine buying an ounce of gold for $400 in the 1950s. Today, that same ounce could fetch you over $2,000. Experts even predicted a rise to $10,000 by 2032. Now that's growth. And if you remember, during the Great Recession of 2008, when stock markets around the world plummeted, the price of gold actually increased by over 30%. This highlights gold's potential as a safe haven asset during economic turmoil. But you don't have to become a bullion collector to invest in precious metals. Gold ETFs, or exchange-traded funds, are a fantastic option. They're like owning a piece of gold bar, which you can trade just like stocks without physically holding the metal. What's your favorite type of metal to invest in? Comment below. Number 2. Industrial commodities. Well, moving beyond the shiny and exploring the essential. Let's face it, the world is constantly chugging along, building, developing, and creating. And guess what fuels that progress? Yep, industrial commodities. The raw materials that power our world. Think silver for electronics or copper for wiring. Their value comes not just from rarity, but also from their undeniable usefulness. Take cobalt, for example. It's crucial for electric vehicle batteries, and its demand has skyrocketed in recent years. The price has doubled in just a decade. Lithium is another essential metal for electric vehicle batteries, and its demand is also expected to surge in the coming years. This reinforces the importance of diversification within the industrial commodities sector. Consider researching a variety of industrial commodities with strong future growth potential, not just focusing on a single metal. Now, you might not have the resources to store tons of cobalt and lithium in your garage. And let's be honest, who wants to? But that doesn't mean that you can't benefit from this growth. You can invest in stocks of mining companies that dig up these precious resources. Or, if you prefer a more diversified approach, consider investing in mutual funds that focus on mining and industrial sectors. Have you ever invested in metals before? Let us know in the comments below. Number 3. Safe haven currencies. The world of currencies can be a bit of a roller coaster. In times of economic or political turmoil, some currencies hold their value better than others. These are called safe haven currencies. Think of Switzerland, a nation known for its political and economic stability. The Swiss franc is a prime example of a safe haven currency. During crises like the 2008 financial meltdown, people flocked to the Swiss franc to protect their wealth, and it even gained value against other major currencies. Let me tell you, in 2016, the British pound significantly weakened due to Brexit, the United Kingdom's vote to leave the European Union. Many Britons concerned about the pound's future sought safety in the Japanese yen, another well-regarded safe haven currency. According to a BBC News report, there was a surge in demand for yen-dominated investments as Britons looked to hedge against potential losses in the pound. Anyways, while opening a Swiss bank account might seem like something out of a movie, there are ways for everyday investors to get involved. Currency ETFs can be your new best friend. They're like a grab bag of different currencies, letting you benefit from the safe haven effect without needing a plane ticket. Plus, Forex brokers like Forex.com let you invest for as little as $100. Number 4. Sovereign guarantee. Have you ever looked closely at a dollar bill? This inscription, it says, "This note is legal tender for all debts public and private." But what does that really mean? Before the 1970s, the US dollar was backed by gold, and today it's backed by the full faith and credit of the US government. In simpler terms, the government promises that your dollar has value because they say so. Not exactly a tangible asset, but a powerful guarantee nonetheless. So, how can you leverage this sovereign guarantee? Government securities, also known as GSECs, are essentially IOUs from the government. They pay you interest in return for your investment, offering a safer alternative to keeping cash in the bank. Remember though, stability often means lower returns compared to some riskier assets. Number 5. Value stocks and mutual funds. Alright, we've talked about safety. Now let's talk about growth. Well, stocks are a classic way to build wealth, but not all stocks are created equal. Value stocks are like the reliable workhorses of the market. They represent companies with established businesses and solid financials, offering the potential for steady growth over time. Think of it like this. You wouldn't buy a car with a questionable engine, would you? Value stocks are like well-maintained vehicles, offering a smoother ride with the potential for steady price appreciation and dividend payouts. Now, researching individual stocks can be a time-consuming task. That's where value-focused mutual funds come in. These funds pool your money with other investors and invest in a basket of carefully selected value stocks. This diversification helps spread your risk and gives you exposure to a variety of companies with strong fundamentals. You see, the concept of value investing has been championed by legendary investor Warren Buffett. Throughout his career, Buffett has focused on identifying undervalued companies with strong fundamentals and the long-term growth potential. His company, Berkshire Hathaway, has become a powerhouse through this value investing approach. There are many value-focused mutual funds available, so better do your own research and choose one with a track record of consistent performance and a focus on dividend-paying stocks. Which stocks are you planning to choose? Comment below. Number 6. Land and real estate. You see, land has been a prized possession since the beginning of time. It's a finite resource, and with a growing global population, its demand is only gonna rise. That's why land and real estate are excellent hedges against inflation. Imagine buying a plot of land decades ago. Today, it could be worth a fortune. Similarly, residential and commercial properties tend to appreciate over time. A study by Bloomberg even showed that housing prices tripled between 1992 and 2020. Despite a dip during the 2008 housing crisis. Now, you might be thinking real estate is only for the wealthy. Not necessarily. Here are a few ways to get started. REITs, real estate investment trusts. These are like mutual funds for real estate. You invest in a pool that owns various properties, allowing you to participate in the market without the hassle of directly managing a property. And then comes the rental properties. This is, in fact, a classic wealth-building strategy. Renters cover your mortgage and expenses, while you build equity over time. It requires some effort, but the potential returns can be significant. Number 7. Collectibles. Getting to the final entry on our list of assets better than cash, this one might surprise you, but collectibles can be a valuable asset class. Think vintage cars, rare art, or even limited edition sneakers. These items can appreciate significantly in value over time, especially if they're rare or culturally significant. Imagine a 1955 Mercedes-Benz selling for over $135 million. Well, not everyone can afford such treasures, but there are ways for everyday investors to participate. Then, look at comic books, for example. In 1938, Action Comics #1, featuring the first appearance of Superman, sold for just 10 cents. Today, a pristine copy can fetch millions of dollars at auction. According to a report by CNBC, the rare comics market has grown significantly in recent years, with some collections appreciating over 250% in value. This meteoric rise highlights the potential for collectibles to outperform traditional investments. There are multiple ways to invest in collectibles. Online marketplaces. Platforms like Whatnot allow you to buy and sell everything from baseball cards to action figures. You can find hidden gems and build a collection with potential future value. Then there's fractional ownership. Platforms like Masterworks let you invest in portions of high-value collectibles, like a piece of a famous painting. This allows you to own a slice of something extraordinary without the hefty price tag. But remember, investing in collectibles comes with its own risks. The market can be volatile, and there's no guarantee of returns. So better do your own research, choose wisely, and consider this a long-term investment strategy. The takeaway: building a wealthy future. So cash might seem like a safe haven, but in today's economic climate, it's like keeping all your cookies in one jar. Sure, they're safe from immediate danger, but what happens if the jar breaks or the cookies get stale? By exploring these 7 exciting asset classes, you can build a diversified cookie jar. Imagine having jars filled with not just cookies, but also cupcakes, brownies, and maybe even some healthy snacks, like nuts and granola bars. This way, you have a variety of treats to enjoy, And if something happens to one type of treat, you still have others to satisfy your cravings. Diversification is the key to managing risk and maximizing your potential returns in the investment world. Spread your investments across different asset classes, just like you would fill your cookie jar with a variety of goodies. Embrace education, conduct your research, and don't be afraid to step outside your comfort zone. The world of investing is full of opportunities, and with the right strategies, you can build a secure and prosperous future. Well, there you have it. What's your take on these asset classes? Have you tried any or are willing to try? Do let us know in the comments below, and hit that like button if you found these tips helpful, and subscribe for more financial wisdom bombs every week.